Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleagues Sonia and Nigel. And guys, thank God it's Friday, right? I mean, what a crazy, volatile week this has been. And, we saved the best of the worst, how you look at it, for the last, right? With that big, raging overnight reversal and extraordinary moves, which we are going to react to this morning. I, for one, am pretty glad that you got one more day to report for, and then we get a break before we come back. Let me just quickly tell you what happened. The S&P 500 rallied 5% from the day's lowest point. 5%. It ended 2.25% higher. That is a huge move. Positioning led reversal, raging reversal across markets. I'm talking about, when I say markets, asset classes, I'm talking about rates, dollar, raging reversal. Post the US CPI, a big dip and then a big reversal. And I think the question which Indian bulls and viewers will want to know is, was last night in the US the start of a strong short covering bounce which can rub off here in India as well? Or this is a move which will get faded on day 2 or day 3? I think that is basically the big question which we will try and get you perspective on as we go along. This is the reversal that I'm talking about, right? Look at that. The S&P 500 low was 34.92. This is last night's low. We closed 5% higher from there at 36.70. The dollar index fell from 114 to 112.4, and the 10-year, actually the rates market movement was the smallest. 4.1 was the high, and we closed around 3.95, 3.96. These are very large moves which we are going to react to this morning. Sonia, hi. Nigel, hi.
Hi, morning, Nigel. Morning. It was, what, a 1,400-point recovery that the Dow saw in one session, right? Behaving like the Bitcoin, perhaps, the kind of volatility that we've seen. But I know everyone's going to talk about the global cues and the kind of impact it would have on our own markets, the pullback, etc. But for me, the other big trigger this morning, and a positive one at that, is Infosys and what it reported. Not just did Infosys raise its FY23 constant currency revenue guidance, but it ticked all the right boxes, at least 9 out of 10, right? So whether it was an earnings beat, very strong deal wins, an attractive buyback, and Infosys has a valuation headroom as well. If you look at it, it's trading now at about 22 times forward compared to the 2-year average valuations of 27 times. So there is some headroom for Infosys to move on the upside, and that perhaps could take the market sentiment, or at least the IT stocks with it. In fact, Mindtree reported a beat on all parameters as well. So these are two stocks that could dominate Mindspace this morning. But yes, of course, coming back to the larger picture, there was a sharp rally in the US. And one would wonder, despite that inflation print, how come the market moved up so much? I think it was after 6 straight days of a fall that there was a pullback, right? So from oversold levels, this is the kind of move that we've seen. Whether this sustains or not, only time will tell, because the overarching theme is still persistent inflation that remains a problem for both the Fed and investors. It will be very hard for the Fed to bring down inflation to 2% as per their timetable. So perhaps this rate hiking cycle is something that could continue, but that's a story well known and well documented. So let's see how it goes. The other thing that enthused me was the quantum of FI selling has reduced. So on an average, in the preceding 4 days, FI sold about 2,500 crores. Yesterday, that reduced to 1,630 crores. So the cues are stacked up in favor of the bulls. But let's see after that initial gap up opening what happens. For now, at least, things are looking good.
We were saying this yesterday, that the chances of a move higher after the market falling for so many days in a row is much higher than the market actually going south. And that is kind of played out. It also shows you that, if to react to the same bad news again and again in equal ferocity doesn't happen when you've got these kind of conditions. But let me quickly outline the bad news first, right? The good news, which was the bad news. The US CPI number basically means that a 75 basis point hike in November is locked in. There's no chance, there's no deviation from that. But what has also happened is that there's a sizable chance that we get another 75 basis point move in December. This is market pricing I'm talking about, not what an economist here or there is expecting. This is market pricing. And market pricing also suggests that terminal rate, right, is now approaching 5% by the second quarter of 2023, and only a 50 basis point cut into the end of 2023. This is the bad news. The good news, right, is that the market rallied aggressively. But what was this rally based on? It was based on extremely oversold conditions and very, very positioning led. I think that should be absolutely clear. No one should look at the screen and say, well, this is the start of a new bull market or anything, or this is the start of, the fact that conditions are improving rapidly in the US. It is not. there is more tightening coming, but the market has rallied despite that. So will you follow the price? Will you follow the data? I would say, at least in the near term, you follow the price. But the price has to give you further confirmation. The S&P 500, by the way, saw a bullish outside day from the 3,500 zone support, 3,500, 3,525 odd zone, which is technically a powerful signal. So there should be more here. The problem is, as we've seen, and you don't have to go back very far, the last Friday we had the jobs data, right? Jobs data was hotter than expected. What happened on Monday? The market rallied. And then on Tuesday, it sold off. So day 2 of the reaction has been critical, has been crucial. But it doesn't have to repeat exactly that way. Here in India, for example, we've been highlighting this. FIIs have been sort of net short. The net short position has come off to about 1.2, 1.25 lakh contracts. FII, the client long positions, which is HNIs, family offices, retail, everything. I mean, you could call that client long positions perhaps as smart money. That is at a record high, 1.5, 1.6. So the retail sort of positioning in the future segment is positioned for this move higher. And this setup is usually indicated that perhaps there is a bit more on the upside before things start to cool off. So this is important. I would say, without trying to second guess whether this rally in the US will continue and then the rub-off here will happen, I think the way to think about this is that we've been outperforming US in any case, right? I mean, there is huge amount of outperformance we are sitting on. When US rallies, we rally harder. When US market falls, we fall less. What this setup does, I mean, this bias of upward move in the US does, is it provides you comfort if you're going long, that the market is not going to sell off aggressively. So I think look for trades on the long side. A few levels just to wrap this up. The Nifty has resistance at 17,260 and the next one at about 17,430. These are simple sort of retracement levels from the high of September to the low of September. And the support is, again, very simple at about 16,950, which is nothing but the low that we've seen for the last 3 days. 3 days in a row, we've hit 16,950, 5-10 points here or there, and the market has bounced, yesterday included. So keep that as a reference point on the downside. Nigel, what are you watching out for?
Well, the ingredients are there for a good short covering bounce. The US markets, they bounced overnight. The dollar index that initially went to around 114, that's cooled off to around 112.5 odd. And the good news actually is that the FIs are net short on the index yet again, which may not be such a bad thing. Now, post-market, you normally look at the institutional data. And yesterday, the institutions were net sellers to the tune of close to around 900 crores approximately. And the FIs, they added 6,000 short contracts. That takes their short positioning to around 81%. The buy zone is very clear. On the Nifty, 16,950. On the Nifty Bank, which has been the driver, that's at around 38,500. You'll be a little disappointed that yesterday the Nifty Bank came in for a bit of a knock. Well, don't be so disappointed because yesterday there was some unwinding of positions that we saw on the Nifty Bank. The reason I say that these two data points are important because the last few days on the Nifty as well as on the Nifty Bank, that 16,950 and the 38,500 mark, that's held out. Now, the options data is quite interesting, and that's giving me a sense that 16,800 to around 16,900 odd level, that's going to hold out. The 17,000 put, that's a good amount of open interest. That has the highest open interest for this contract. That's for the coming weekly expiry as well as the bigger expiry that's later on. So that's telling you that there is some writing at that level. The problem is, yesterday as well, we saw aggressive writing at around that 17,000 call. The premium out there was around 250 rupees. It came down to around 200. So just punching in the numbers then, support is seen at around 16,800 to 16,900. And the bears are betting on that 17,250, 17,200 to 17,250 odd level holding out. In case we can get past that level, we are bracing ourselves for a big, massive short covering bounce. So just keep an eye out on that. And that perfectly ties in with the Nifty. The 20 DMA is what I'm looking at. And the Nifty Bank, I'm looking at the 50 DMA. Those are crucial levels. The starter is going to be in the green. Maybe if you get an intraday dip, well, you should try to buy the Nifty, maybe at least today, given that the dollar index has cooled off. And just one more point, Hdfc Bank comes out with its set of numbers tomorrow. So that could be a bit of a mover for the Nifty Bank, in late trade today. So those are the cues that are stacked up. We are bracing for a short covering bounce. Will we get it? That's the big question.
It looks like that could be the case today, right? I mean, look at the Asian markets. Hang Seng is up over 3% right now. And I think one thing is certain, that this 200-day moving average of 16,980 is now a firm line in the sand on the downside. So it's a firm support for the market. But a couple of more things to watch out for. There is, of course, Bajaj Auto will be reporting earnings today, so we'll keep tracking that closely. There's a good quarter-on-quarter improvement in margins that we're expecting. On the volume front, not that great, but just keep that on your radar. And as Nigel was pointing out, tomorrow you have Hdfc Bank that reports its numbers. Now, this time around, it's expected to be a strong one. There's a 15% NII growth, a 22% net profit growth that we're looking at. And in general, financials have been front and forward, so I'll look out for those earnings as well. There's also Tata Elxsi that reports today. Will be very interesting after Mindtree's solid beat, Infosys good numbers. Tata Elxsi is the next one to watch today. So we'll keep tracking all of these cues for you. It promises to be a hectic day and a day littered with green on the screen. So let's kickstart with a view coming in from Jonathan Garner of Morgan Stanley, who says that while US core and headline September inflation surprised to the upside in October, our discussions with clients suggest high awareness of global macro risks and exceptionally high cash positions. He also says that last night's price action in US equities, together with exceptionally low valuations, adds to our conviction that a major trough is forming for Asia and emerging market equities.
Well, on equities, Eric Fishwick of CLSA says CPI will prove sticky is already part of our US forecast. Accordingly, we make no changes to our Fed funds forecast in this release. He says a 75 basis point raise in November, 50 basis point in December, and a final 25 basis move in Feb. This forecast would be too dovish if we thought that the Fed would wait for inflation to fall close to target levels before abating tightening. But we think it is more likely that the Fed is looking for evidence that inflation and the labor market are behaving how its models suggest. Without this, its policy has to be reactive rather than forward-looking. Eric also hopes that slower growth will start to deliver the weaker labor market that is necessary for this to happen in the coming 6 months.
Okay, let's get you some money market views. Yesterday, the rupee closed at the 82.34 level. It ended marginally weaker ahead of the inflation data in the US. Here's the expectation for today. Bhaskar Panda of HDFC Bank says that the US CPI reading is suggestive of further rate hikes in the US. He says several Fed speakers prefer another large rate hike in November. As a result, he adds the dollar index was trading higher while we got a bit of a relief from oil as it remained lower. He said the dollar INR pair could take a bit of heart from lower oil prices and the fact that it recently has faced resistance. Given this background, he expects the dollar INR pair to trade in a range of 82.20 to 82.45 for the day.
Well, in the bonds, we've got Bhaskar Panda who says in India, the CPI reading was as expected and crude oil is still trading at a tolerable level. He expects the 10-year benchmark bond yield to consolidate within a range of 7.4 to 7.45% for the day.
Okay, we have a lot of stock-specific action as well that we're going to be tracking for you, and we'll get to that in just a bit in our top 10 segment. We're looking at Infosys, Mindtree, Angel One, Anandrati, Spark, HDFC Life, NMDC, ONGC, as well as Oil India. And all those stocks, they are on our radar on the back of positive news flow. And Cyan, that's the stock that's likely to open up in the red, the lone one actually.
All right, so that's what we have. Let's get in some perspective now. Cameron Brand is Director of Research at EPFR Global, and Ed Yardini is President at Yardini Research. Gentlemen, great to have both of you with us here. Thank you very much for your time. Cameron, you publish your data on Thursdays, right? The data for the prior week. EM equities, equity funds have been seeing outflows. I think we saw outflows. The last number we have is for 8 straight weeks we've seen outflows. What happened as part of the latest data, EM funds?
Well, actually, that's that isn't quite the number. We've actually seen, I think, getting on for 7 weeks of inflows at a headline level, but that's a deceptive number. It's sort of staying in positive territory largely because of institutional flows to China equity funds. However, I would say the opposite is also true, that we're definitely not seeing the sort of levels of angst and risk reduction in the emerging markets equity space that we're seeing in some of the other asset class groups.
Just, sorry, the number, the EM equity funds, the number I have is, I'm talking about equity funds, not overall. We've had strong outflows, right? I mean, this is...
are you talking about is this dedicated to India?
No, I'm talking about the emerging market equity universe. And bulk of that outflow has come from not regional funds, but GEM funds. And it's been the longest streak of outflow since pandemic. I mean, March or April of 2020. Yeah, that's what I was referring to.
That's true. Yes, the diversified global emerging markets funds have been on a rough losing streak, and that isn't good for India because India has actually benefited, if that's the right word at this point, to a fairly big degree from the scrambled reallocation of Russian exposure that happened towards the end of the first quarter. So India's stock with global emerging markets funds is high. Unfortunately, global emerging markets funds don't have money to back up that conviction at the moment.
Okay, well, Ed Yardeni is also with us to give us his view. Ed, morning, and thanks for joining us on the channel. It's a given that now there are more rate hikes coming from the US after the reading into the September Fed minutes as well as the inflation print. But how much of that you think is in the price already? And how did you read into the sharp pullback that we saw overnight in the US?
Yeah, I think to a large extent, a lot of the bad news is in the market. As you said, we had several days where the market was down. And I think during those days, a lot of portfolio managers may very well have hedged their positions, fearing that the CPI might be surprisingly bad again. We've had a few times when that happened this year, and the market took a big dive and stayed down. This time around, I think what happened is that so much hedging had occurred that when the CPI did in fact come out stronger than expected, more inflation than expected, that a lot of those hedges were covered because they worked quite well. And then, of course, some of the people who were actually outright short without any hedge had to cover. So it was a heck of a reversal day today. And I think it's going to make it harder for anyone to short this market anticipating bad news because it is so prone to these technical reversals. And so I really think that the June 16th low, which was 3,666, is turning out to be sort of roughly the bottom of this trading range that I see through the end of the year. And I think the upper end of the trading range is 43.05 on the S&P 500, which is where we were on August 16th.
Hi, Mr. Yardeni. Well, we've got that, and good to hear that June 2022 lows could hold out in your opinion, so that's pretty good news. I want a couple of data points from you. Post this red-hot CPI inflation number that we have got, do you believe that could be 275 basis point rate hikes in the upcoming meets? Earlier, I think you were factoring in around 125 basis points. So what's your take on that? And also, I recall we were talking about the hawkish and the dovish pivot. Well, no signs of the dovish one from the Fed yet, right?
No, not really. That's what's really been quite extraordinary is the committee just seems completely united, seems like groupthink, not even one significant dissenter from what the crowd of FOMC folks are saying. I think it's pretty well anticipated. I think it's consensus that 75 basis points is what the Fed's going to do at the early November meeting, and that there might be another 50 basis points at the December meeting, and there might be one more hike early next year. But I think the market is starting to sense that we're getting closer to the Fed accomplishing what it wanted to accomplish, which is to get the Fed funds rate closer to 5%, which they view as restrictive, and then keeping it there. I think Fed officials were somewhat concerned a few weeks back when the market seemed to believe that the Fed would be lowering interest rates next year, and they wanted to make sure that that isn't the message they were sending. So I think the message that they've made quite clear is they intend to have a few more rate hikes, get it to restrictive and keep it there. I don't think it's going to be the kind of tightening that we saw with Paul Volcker, where interest rates were just allowed to go to whatever level it took to cause a recession and bring inflation down. I don't think they're going to go that route.
Okay, well, on that note, we'll thank both of you for joining in. I think the market is also looking at it like that. That's Ed Yardeni of Yardeni Research saying that the June 16th low of the S&P 500 could hold as a base for the rest of the year. And the market is pretty much priced in a lot of the bad news with respect to inflation as well as rate hikes. Let's slip into a quick break. But when we come back from the break, our entire research team will be with us to help us talk about the top 10 stocks that are in focus this morning. Stay tuned. Welcome back to Bazaar Morning Call. Plenty of stocks in focus. Top of mind, of course, will be Infosys after the good set of numbers, the attractive buyback. A lot of brokerages have raised their target price on the stock as well. We'll come to that in a bit. But in the meantime, there are some other numbers to track. There's Angel One and Anandrati that we're looking at this morning post numbers. Surbi is here to give us the latest on that. Surbi.
Strong set of results from Angel One. They reported their highest ever quarterly revenue. The revenue was up 7% sequentially, the EBITDA was up 14%, and the PAT was up 18%. Operational metrics were also strong. Client base and number of orders both were up 11%. Average daily turnover, that was up 30%, and cost to income ratio was also lower sequentially at 49% versus 53% in the previous quarter. Next is Anandrati Wealth. Strong numbers there as well. The revenue is up 33% at 133 crores. PBT is up 40% at 58 crores. Their AUM increased by 16% and they added 451 clients this quarter as opposed to 307 in the previous quarter. Client attrition was also lower at 1.42%. Expect both the stocks to be in green today.
Thank you very much for that. Now, Infosys, of course, is the big one. The ADR was up 4-5%, and the numbers seem pretty good. Rima is here with the analysis. Rima, hi, morning.
Hi, morning. A very good showing from Infosys. A Q2 margin beat, very strong deal wins. There is a buyback support. The miss was in the form of Q2 revenues, which came in softer than Street was anticipating. And as you pointed out, the ADR spurted close to 5.5%. So Q2 numbers, constant currency revenue growth of 4%, margins expanding by 150 basis points to 21.5%. The FY23 guidance has been tightened. So in terms of the revenue, they're now expecting revenue growth to come in at 15 to 16% versus the earlier 14 to 16%. So the lower end of the revenue guidance band has been raised. The upper end at 16% remains intact. On the margins, the reverse has taken place. The upper end of the margin guidance band has been brought down. So the new margin guidance is now at 21 to 22%. There is the buyback as well. It's an open market buyback, 9,300 crore at a maximum price of 1850. Brokerages are largely enthused by the numbers. So Nomura, Macquarie, CLSA, all of them are bullish on the stock. Back to you.
All right, Rima, but a busy week for you. You're lucky, though. Quite a few of your numbers are already out of the way. What about the other two names, Mindtree and Cyient? What's your take on them?
Well, Mindtree has been an excellent quarter yet again. It's an all-round beat. Only issue is that the management commentary was a bit cautious in the conference call which took place yesterday. Morgan Stanley and Nomura post the numbers have gone ahead and raised the target price because Q2 was a beat both on revenues as well as in margins. As I pointed out, the management commentary was a bit cautious. So it's not just retail. Now they're saying we're seeing incremental caution in the high-tech vertical as well. So, that's just the bit of a worry that the outlook is a bit uncertain. They said the merger with LTIs and its final legs will close by December 2022. Cyient Q2 was a miss. On revenues and margins, it's come in softer than what the street was anticipating. That said, the FY23 guidance has been maintained and the company this time has given you an FY24 outlook, which is positive because most companies are shying away from talking about next year due to the uncertainty. But Cyient has come out and said that we aspire or we have the visibility to reach $1 billion of revenue by FY24. The question, it'll all lie now in terms of the execution of Cyient now. Back to you.
Okay, thanks a lot for that. So that's on Cyient. Perhaps stock could be under pressure today. But some more stocks that are in the news this morning. Sonal is here to give us the latest on that. Sonal, hi, morning.
Good morning, Sonia. Well, three stocks on my radar, starting with Spark. The stock was up 2.5% yesterday as well. The company updated an investor presentation where they said that they are looking at 2 investigational new drug filings, which is targeted by FY24. They also say that there is a sharp focus on execution in order to deliver key updates in next 18 to 24 months. And licensing of a key seizure drug is also underway to a potential partner. In terms of liquidity, they say that balance of rupees 703 crore rupees to be received by December 2022 upon conversion of some warrants in the company, and they've obtained fresh approval in September 2022 2022 for raising up to 1,800 crore rupees. The other stock that is on my radar is NMDC, received the MC approval for demerger a few days back, and now they've set the record date of this demerger on 28th October. Lastly, HDFC Life, because they have received the final approval that is coming from the insurance regulator for Exide Life merger. So these stocks on my radar today.
All right. Thank you very much, Sonal, for that. Now, ONGC and Oil India should be in focus. Oil prices, of course, have moved a bit of a move higher. Manisha is here with more. Manisha, hi, good morning.
Morning, Prashant. Thank you for that. Yes, we have seen 2% of a gain overnight in case of crude oil prices. So we are back around that $94 per barrel mark. Having said that, for the week, we are still 3.5% on the lower side because we've seen the prices come off from almost $98 of a high is how we started this week. But the gain in prices comes in as the U.S. inventory data that came in yesterday shows that the distillate inventories, especially the diesel inventories, have continued to decline, and this is ahead of winters. We are facing this problem not just in U.S. but in Europe and Asia as well. That is adding premium to prices. And even as the U.S. crude inventories have gained, they are still 1% below the 5-year average, especially ahead of the winters, and that has been supportive. Markets also looking at the Polish pipeline PERN, which has detected a leak in the Druzhba pipeline from Russia to Germany. That means that already hungry and starved Europe could be getting lesser crude from the pipeline in Druzhba, is what is also taking the prices slightly on the higher side.
Okay, Manisha, thanks a lot for that. Well, here's a quick recap in case you missed out on any of the stocks with positive news flow today. Infosys, Mindtree, Angel One, Anandrati, Spark, HDFC Life.
Welcome back. Well, the SGX 50 is suggesting a big gap up, close to 230, 240 points last time I checked. Now, in fact, it's got even a steeper, 350 points. Maybe we'll pull up the intraday chart on the SGX 50, and that's suggesting a big gap up. If we can open up anywhere close to here, it'll be interesting to see whether or not the shorts they'll have to squeeze out, because that 17,250 will be a bit of a barrier. But let's turn our focus to tech major Infosys. Then they reported a mixed second quarter. We spoke to the company's MD and CEO, Salil Parekh, on the issues ranging from margin guidance, hiring, as well as moonlighting. Let's hear out what he had to say.
We've seen, as we go through the quarters, normally we reduce the band of the guidance as we see more visibility within the full financial year. We've seen very good large deals momentum. We've seen good pipeline and a good Q1 and Q2 on growth. And there we've made the guidance in the top end. So we had 14 to 16 and now we made 15 to 16, which is at the higher end of the guidance, which gives us more confidence and visibility of what is going on within the year. Margin guidance, last quarter we had said that our guidance was 21 to 23%, but that we would be closer to the lower end of the guidance. As we've come in here for this year specifically, since we felt we were going to be at the lower end of that, closer to the 21% in the guidance, we've decided to reduce the band. We don't see any indication of a change in terms from the past years of what the quantum will be. But there are always furloughs, so that seasonality comes in. But the recruiting at 10,000 is a very strong number. And we've already had, as you mentioned, good recruiting in the last few quarters. Last year we had 80,000 college graduates. We're also making sure that the macro points we discussed earlier, we're keeping that in mind. Our view is, Infosys is a hugely focused learning environment company. Internally, we have for years a system that we had set up for gig work where employees can do things beyond what they're doing in their job, apply for these things. We've had in any given quarter 4,000 employees who apply for it. 600 who get it. So it's something which we're very familiar, comfortable with. It's a platform we call Accelerate. For external gig work, we have got an approach where with the prior permission of our manager, keeping in mind confidentiality and contractual, the employees are allowed to do that.
Okay, all right. Well, that's going to be the big stock of the day then. But let's get straight to Sanjeev Bhasin, Director at IIFL Securities, who joins us on the show. Hi, Sanjeev. Morning. Thanks so much for joining in. Well, Sanjeev, we want to talk about a lot of stocks. So first up on the index, we are at around that 17,000 odd mark. SGX Nifty suggesting a gap up. What's your view? Where are we headed from here? 18, 19, what's it?
Good morning, Nigel. Well, I think Prashant sounded the US that I'm on your channel in the morning, so better keep your eyes open. On a lighter note, 17,300 to 400 may prove to be a resistance. But mark my words, next week onwards, the second half of October, you're going to see the best bull rally ever. And that means the US markets will lead from the front. India will obviously outperform. So no holds barred, 18,200 by Diwali. And I think that the sheer pessimism of underweight India is now changing, and that will see a lot of inflows. You've seen, bear markets bottom out at the height of pessimism and oversold nature, and that's what you saw yesterday. So I think you'll see another 2 days of, pessimism that this is a one-day rally or something. But no holds barred. I think 17,400, once we cross that, 18,000 to 18,200 by Diwali, all fingers crossed.
Okay, Sanjeev, you look like you're dressed for Diwali already. So season's greetings to you. Aren't you going to do a little dance for us?
So Sonia, you're naughty and you've been watching. Yes, that time Bank Nifty made a new high, but mark my words, when Nifty makes a new high, I'll do a bhangra with you in your studio.
Oh, definitely waiting for that, always. I mean,
Prashant, you want to join?
always ready to party, right?
Nigel, Sanjeev, the first time Sanjeev and I spoke, I think Sanjeev was 2005? I think, or 2006.
2006, Prashant, 2006.
So it's an old relationship, and so we go way back.
Ups and downs. You've seen up.
Yeah. I mean, markets ups and downs. Sanjeev, what is, to be fair, on a serious note, markets here have already seen. I mean, we're vastly outperforming, right? When the market goes up, here the market goes up a lot more. I'm talking about compared to global. When the global market falls, we fall less. We're already sitting on huge amount of outperformance. How do you square that with what's happening globally? Go on.
So Prashant, two things. See, I can take the count that India is an expensive market and has remained so. But look at the wall of liquidity. It is the retail investor, and make no bones. It's been 16 weeks. I travel every weekend, and in smaller cities. You've never even been to Latur or Aurangabad in Maharashtra, and you can't believe the fervor there of buying a SIP or being invested. So this is not a 1 day or a 1 week or a 1 month or a 2-year story. This is here for keeps. Now that means that definitely there will be, the to's and fro's on the trough and the tides of how the global markets play out. We are succumbing to the dollar and so on. But take it with a pinch of salt. Just to give you a brief, on Sunday, 420,000 people traveled by air, which is a pre-COVID record. Now, either we are getting something wrong or our demographics are working to our premium. Look at the cars, look at the auto, look at the mortgage lenders, look at the airports, look at the hotels. So take it with a pinch of salt. We are an expensive market and we will remain so. There will be pockets of outperformance, underperformance. If the global markets do correct, which they have, then we will slightly also correct. But make no bones, we are headed to new highs before the other markets do.
Sanjeev, which are the areas, right? I mean, so you want to be in outperforming areas, right? Pockets which do really well, in a market which does well, but you want to be in the really stronger parts of the market. And if you're expecting a strong rally from next month, you said, right? Which are going to be the leaders in your opinion?
Next week. Prashant,
okay. Second half of next week.
For next month.
Okay.
Yeah, next week.
Okay.
In November, there will be a bhangra with Sonia, so be prepared. On a lighter note.
I'm always ready. But you tell us now, what are you buying? So if one has to capitalize on the rally, one needs stocks, right?
Yeah, so Sonia, see, banks have relatively outperformed, and take the largest of them all, ICICI Bank. I think that has been a darling of a stock. Take the other case of when in my last 30 years have I seen Cummins, ABB, Bosch, Siemens, L&T all hit new highs. So it tells me that capex and infrastructure stocks are seeing the best time they've ever seen, and they are investing in that capex. You've seen autos lead from the front, like the likes of Eicher Motor, Ashok Leyland. and you know, M&M. You've seen cement players now consolidate, and I think some of them are now poised as monsoon is over. And a whole host of mid caps, you know, just take it with a pinch of salt. Last year, my top pick was on hotel industry, was Indian Hotel at 145. And this Diwali, it is Indigo. Like I said, if I've been traveling, there is no let up in the way Indigo flights are full. Their pricing power is such. You talk of artificial intelligence, you book a ticket today, tomorrow it's 1,000 rupees expensive. So that's how they are playing on, you know, your imagination, your outlook. I think Indigo is a no-brainer from here to 2,500 by next Diwali. That is my top pick. Housing mortgage is seeing the best time ever. If you heard Mr. Deepak Parikh or KK Mistry, and there is a small cap called Canfin Homes, which I think is in the threshold of getting a new external CEO. The book is the third largest in the book in the mortgage space, almost 50,000 crore, and the market cap is 6,000 crore. I think Canfin Home can be a 750 or 800 rupee stock in the next year. I can go on. I have certain stocks like Indian Hotel, Ashok Leland. In HCL Tech has been my favorite. Prashant knows that, and numbers were far ahead of what the street was making. And last but not least, I leave you with a dark horse, JP Associates. Now, I have covered this with Prashant for the last 10 years, 4 rupees, 8 rupees. Now they are in the realm of selling the 10 million capacity of cement. There's a talk of 27,000 crore debt, but let me tell you, 18,500 is already in a SPV on the land bank. The rest of the 9,000 will get a relief if this happens. There is a 750 crore escrow account which has been released by the Supreme Court, but the Allahabad High Court judge was on leave. And the NCLT case, ICICI has whole hope that they come out of this. Next Diwali, this stock is 30 rupees. So take it with a pinch of salt. We are invested in a lot of these names, so we will have interest there. But I am giving you some of the basket of ideas of large and small cap both.
And JP, we've seen, we've spoken about it, as you said, I think more than 10 years. But is it a lot of, another name, Sanjeev, is the turnaround, potential turnaround, right? BL Kashyap. I don't know if you, since you mentioned JP, I'm only mentioning that. Again, I think he's in CDR, is about to come out, is a very large contractor, prestigious contractor, by the way. They do all the work for embassy. Should one look at these kind of opportunities, which are cheap, on the verge of a potential turn, but some things don't turn, so one has to be mindful of that, so choose carefully. What's your sense? If you have a view on BL or other names in this category?
So Prashant, first let me tell you I love you, because BL Kashyap is my top pick, and it has been, and it is in our portfolio. Now you've given all the right reason. Let me also say BL Kashyap was in litigation regarding something on GST, which has been solved. A, B, like you said, they do all the contract work for embassy, which is now the owner of India Bull Real Estate. So make no two bones, this stock can even go to 75. All I'm trying to say is these are not stocks which are everyday run of the mill. But if you sit patiently with some of these turnaround stocks, then you cannot double but even triple your money. And like you said, BL Kashyap is, as a disclosure, under our coverage. We have it in our portfolio and some of our clients in this range of 23 to 25.
Nigel, one minute. I know you have a question. Sanjeev, but, with what you said, I think you'll have to do the Bhangra with me also.
Sanjeev, I'm feeling left out. You're doing the Bhangra with Sonia. You love Prashant. What about me? But anyways, you had promised me Chole Bhature in Delhi, so I'm going to be coming. No, I'm going to be going there. Sanjeev has invited me and my wife. We're going to be having it in Delhi, so I'm going to take that. Post the dancing.
But we should remember this moment, right? He's officially declared his love for Prashant on national television.
Absolutely,
so
Prashant.
honor.
Prashant and I go back a long way. Do you know, Sonia, Prashant owns more land bank in backwaters of Kerala than any of you put together.
Oh,
he is a pure real estate man, and he told me in 2007, Sanjeev, I don't believe stocks, bonds, only real estate. And in the backwaters of Kerala, more land he has, none of you put together have that.
Sanjeev,
I take it with a pinch of salt. I'm correct. Let him say it's not there. You are most welcome to my restaurant anytime. You will get the best butter chicken and the best dal you've had in a long time.
Right, all right, Sanjeev. You know, and this Prashant goes on cribbing about these home loan rates. Anyway, Prashant, I'm going to take you up on that in the break sometime.
You know, Sanjeev said, what he says, take it with a pinch of salt. So, I mean, take it with a very large pinch of salt, this one at least,
all right, Sanjeev,
not the other stuff.
Sanjeev, very quickly, before we wind down, you know, could you tell us what about these metal stocks? You know, in the past, you've got that pretty much right. I remember a year or so ago, and then we had a good run. But from the top, some of them have corrected. What's your pick in there?
Yeah, Nigel. So see, if you've seen that on aluminium, embargo, it can spread to others. But believe me, the dollar has topped out for time to come. And I can see that yesterday the biggest trade was short dollar and long equities. And if that is going to be the case, then Tata Steel, Hindalco, Vedanta are going to be laughing their way to the bank. These stocks have underperformed, not because of a huge margin cut, but a small sort of loss on EBITDA and the problem which you are seeing on the export ban. But given the type of earnings, by the way, the type of debt these guys have repaid, these have become growth stocks. These are not value picks now. So I am very sure, like I said, the names Vedanta, Hindalco and Tata Steel, we've been accumulating those. We think aside from a trading play, they become very good portfolio plays and they're a best hedge against the weaker dollar, which I think is going to stay for some time.
Okay, Sanjeev, always entertaining, informative, and that humorous conversation.
You know, when someone says, I love you, you have to say, I love you back. So, we love you too, Sanjeev.
Okay, Prashant, wish you all the best and all of you a very, very happy Diwali.
Thank you so much.
Happy Diwali.
And look forward to meeting you all and doing the Bhangra with you in the stadium.
You know, it's a pleasure and honor to host you here in our studio when we hit that level of 18,200 that you're speaking of by Diwali, right? It's not too far away. So greetings of the season to you, your entire family and your team. Thanks a lot for joining in on CNBC-TV18. Well, that was one optimistic view, kick-starting the day, all of us pumped up. And so is the market, by the way. The SGX Nifty indicating a bumper start this morning. Let's slip into a quick break. On the other side, Mitesh and Srikant Chauhan will join in with some technical trades.
यूं ही नहीं मैं बन जाता हूं कुदरत के कोने कोने से खूबियां खोज लाता हूं गुणवत्ता की गहराइयों का गोताखोर हूं मैं पर उम्दापन की नई ऊंचाइयों को छूना चाहता हूं मैं यूं ही नहीं मैं रजनीगंधा बन जाता हूं
Get the grip of good health even after 50. Presenting now Star Health Premier Insurance Policy. Always at your doorstep.
Happiness is getting home solid wood furniture this Diwali from insaraf.com, India's #1 solid wood furniture store.
हमारी कार कितने में निकलेगी?
सर ये
वाह
यस सर OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
सुनीता सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
बाबूजी सुना आपने सुनीता क्या बोल रही है?
ये सब यही बोल रहे हैं कि ये प्राइस ही नहीं सरप्राइज है। Visit olxautos.in.
Before buying a new car, check ACO Insurance Company and save up to 45,000.
ये वक्त है खुशहाली के आने का, ये वक्त है जीवन को रोशन कर जाने का, ये उत्सव है असली कारीगरी का, ये वक्त है समृद्धि को घर लाने का।
बिना थके बस लगातार चलना मेरी ताकत है खुद मंजिल हंसकर कहती है जीत तो इसकी आदत है
टाटा इंट्रा V50 सब कुछ उठाए हर दिन जिताए।
All right, welcome back. So let's just look at the SGX Nifty, and that is giving us reason to cheer and smile. 350 points higher. So we'll get a strong opening, no doubt. But what after that should you, I mean, if you're long, should you hold on? And if you're not, I mean, if you're light, what should you do? That's the question. And who better than Mitesh Thakkar and Srikant Chauhan to help us with that question. Gentlemen, good morning. Good to have both of you here. Srikant, to you first. What's your setup and what should one do? For those who are carrying positions and those who are not, what's the advice? Briefly.
Yeah, good morning, Prashant. Good morning, everyone. Good morning, Surya. I think, see, the important level is 17,340 and 17,450. So if there is any long position, then we should look for taking some profit on the long position because it's a windfall gain that they are going to get out of this particular rally. We need to see that whether the market is managing to sustain above the levels of 17,340 or not. If we see the market is sustaining above those levels, then again, we should look for adding some positions because in that case, the next level to watch out for would be 17,700. So the current formation is suggesting us that we are heading for 17,700. But the way there is gap up opening and at huge gap up opening, we should look for taking some profit on the positions. On dips, 17,250 is going to act as very good support. And if the markets are really strong, then it will not close below the mark of 17,250. That's the overall view.
Okay, Mitesh Thakkar is also with us. Mitesh, is it a given now that the 200 DMA will form a firm support for the Nifty, or could that be challenged once again? And what is your view on how today could shape up, both for Nifty and Bank Nifty?
So I think one, we were actually looking at possibly a breakdown below the 200-day average. Though I think, I said that, till it breaks down, we will not go short on the Nifty futures. So that's kind of held on. Now the upside, we have seen that 17,300 odd levels have been some kind of a supply pivot on the short-term and immediate charts. I think if we start getting beyond that, then the negative setup is erased. And then you're looking at rallies happening to about levels of 17,750, 800. So I think today that would be crucial. The Nifty IT, is the index, of course, with Infosys numbers and the ADR movement happening. The Nifty IT could be the, index which I'll keep a close watch upon. I think it had a high of around 28,250, 300 3 days back. And I think if that level is being cleared, then I think the Nifty IT should gain good momentum and IT stocks should add a lot of weight to the already existing positive momentum on many banking names. So I think if that happens, then I think we are preparing for a breakup of 17,300 and then looking at 17,750, 800 as the possible target area.
Okay. All right. What about picks, Mitesh? What are you looking at?
On the stock side, Nigel, good morning. I have all buy calls, 2 IT names on the list, Coforge and HCL Tech. So Coforge is a buy with a stop at 35.95, targets of 37.50, while HCL Tech was a call yesterday as well. Now can be bought with a stop at 968 for targets of 1,050. Apart from that, Coal India is a buy with a stop at 231 for targets of 242. And Hdfc is a buy with a stop at 74 for targets of 80.
How about you, Srikant? What would your buy and sell calls be for the morning?
Yeah, I think it's a really good news for those who are like bulls of technology, because IT index had started forming some double bottom or rounding bottom sort of formation. So gradually we are going to see upward activity in almost all the IT company. That's the overall view. We also like HCL Technologies because the stock has broken its previous high, which was around 980. So here we are expecting stock to move towards 1,060 or 1,080. So it's a buy at current level with a stop loss around 950. And the other stock which we like is from the finance space, and that is Axis Bank, which is around 800 levels. There we are expecting 850, 860 sort of levels. We should look for adding some positions on Axis Bank with a stop loss at 780.
Okay, gentlemen, thanks a lot for joining in. Let's get a quick handle on what's happening in the F&O market as well. Chandan Taparia of Motilal Oswal Financial Services is with us. Chandan, good morning. Your thoughts on the index, and quickly if you can take us through your list of stocks.
Good morning, Sonia. Thanks for having me. So we have seen a good recovery in the global market, and the Dow is recovering from their deep oversold territory, and we believe that Indian market will follow the same, but follow-up is required. So as of now, we have noticed that from last 3 trading sessions, the Nifty is continuously finding support near to 16,950. So that is going to be a temporary or key support zone, and because of that, this rally could drive to 17,442. And if surpasses 17,442, then this Diwali will be cheerful to us, 18,000, 18,200. So I think 17,442 is going to be the acid test for the market if market has to really cheer the bullish sentiment. Now talking about Bank Nifty, we believe that 38,500 to 40,000 will be the stance to play forward. Now looking at the stock ideas, first it is buy on HCL Tech. We have seen that Nifty IT is finding bottom process, and selective results are boosting the sentiment. So here we would like to recommend to buy on SCL Tech. This stock has given a breakout from its falling supply trend line on the daily scale. Some long built up is visible by 8 to 10% in last 2-3 trading session. Rounding formation on the daily chart also indicate the positive stance in the counter. So recommended to buy on SCL Tech with a stop loss of 955. And here we have potential to move by 4 to 6% towards 1025. Second trading idea, that is buy on Coal India. Again here also cup and handle and rounding formation visible, which has bullish implication for further uptick. So recommending to buy on Coal India with a stop loss of 227, and here we have a target towards 250 level. Last idea, that is from the defensive pharma space, that is buy on Sun Pharma. This stock is holding well and comparatively finding strength even if market declines. So pole and flake breakout is visible with built up of long position. Some put writing is visible in Sun Pharma, so recommending to buy with stop loss of 948, and here we have a target to us 1010 plus in the Sun Pharma as well.
All right, Chandan, thanks very much. Appreciate you joining in with that, with those trade setup and trading ideas as well. Well, let's just take a look at the SGX and take that break, because on the other side we will come back with the pre-open, but we'll also speak with Krishna Bodanapu, Managing Director and CEO at Cyient, to discuss their second quarter earnings performance. Cyient does remain the cheapest mid-cap IT services name out there. So that'll be always an interesting conversation with the management of Cyient. Back in 2.